The Fed is debating getting rate hikes out of the way sooner. Dun, 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 dun. And again, this is hot news, 17th of July. So we scroll down. And here we go. So we have two articles to kind of triangulate what we believe versus what these two articles believe in. Some Fed Reserve officials were already advocating for 2 consecutive rate hikes starting July to ensure inflation's defeat. That means July and September. And those of you who voted for 1, 2, this is your red box right here. They also believe like you do, and they explain it. But will their sway hold amid a shakeup at the Fed committee that decides interest rates? And the answer is, holy moly, probably. Okay, so we are now working on a thesis of 1, 2, July and September, right? So apply your mind, those of you who voted for 1, 2, this is your answer. Here we go. We're going to start the framework here on the thesis of probability of 1, 2. Exactly what you voted, 1-2. Okay, I keep it up there, and we go and understand what St. Louis Fed President James Bullard, the Fed's most hawkish voice, announced Thursday is stepping down in August. So he will not be voting in September. Economist Adriana Kugler, known for her dovish posture, is likely to win Senate confirmation for governor role at the central bank. While a July rate hike has been baked in for some time, the Fed's decision in September isn't as clear as plenty of data will be released until then. Okay, so 1 is like almost confirmed. 2 is a question mark. With that, press on. What is clear, however, is that Fed chair historically has a major influence in the FOMC, the Fed's monetary policy making arm. Fed Chair Powell has said the Fed still has more work to do, and he himself hasn't ruled out back-to-back rate hike. This is the one we need to box out. The central bank has a tradition of collegiality, meaning that although officials debate their views, they still respect the view of the majority. That's why the vote in June was unanimous, despite the debating that was evident from the meeting minutes released earlier this month. Right now, it seems like the hawks outnumber the does. So why the bias is toward hiking in September? So those of you who voted for 1, 2, listen up. Fed Governor Christopher Waller, who has a permanent vote on the Fed committee that decides interest rate, doubled down last week on the widely held view among Fed officials that 2 or more rate hikes are needed this year. That's it. This guy has sealed the fate. And he will convince his colleagues we need 2 more rate hikes. In fact, he introduced one more word. Just 2 more rate hikes. That means if I read it together, 2 more rate hikes, which is the terminal rate of 5.5, all right? So we are still trying to bet on, is it a 1, 2? Since the June meeting, with another month of data to evaluate lending conditions, I'm more confident that banking turmoil is not going to result in a significant problem for the economy, and I see no reason why the first of those 2 hikes should not occur at our meeting later this month. He is talking about July. But he also suggested that the Fed prefers to get rate hikes over with as soon as possible. From there, I'll need to see how the data come in. If inflation does not continue to show progress and there are suggestions of a significant slowdown in economic activity, then a second 25 basis point hike should come sooner rather than later, but that decision is for the future. In other words, if inflation slowdown stalls, the labor market remains strong by historical standard, and if the economy's expansion cools only marginally, it would be best to reap the benefit of and hike in September. The longer inflation remains elevated, the greater the risk of inflation expectations becoming unanchored. This means that there's a dangerous risk Americans could simply begin to accept permanently higher prices if inflation doesn't come down soon. So with that, that is your terminal rate. That will be confirmed for July. I think July is a done. But the decision in September will be a difficult one because the Fed will have to decide whether to get its second hike out of the way or wait for worse signs that inflation is not on track to hit the central bank's target of 2%. And officials have made clear they want inflation to come down as soon as possible. Okay, so I go down the rest, nothing much else. It's still a big bet. And that concludes our presentation on whether it's 1, 2, 3, 4, 2, 3, or 3, 4, but confirm one will happen. Hi, thank you for watching. If you enjoyed the way I go about performing analysis, connecting the dots, then I want to invite you to our upcoming Cozy Live Trading. This is a full-scale 5-hour session, and what we do is this. We always cover the past 2 weeks, what the key events have happened in the stock market, and we also cover the next 2 weeks. So together, coming to the Cozy Live Trading, you enjoy 1 month of complete knowledge whereby we connect the dots, perform the analysis, and then we fire off the trades. So join us really soon in the upcoming Cozy Live Trading. Go below right now, click to register, and I shall see you in the class. Thank you. Goodbye.